What opportunities are there in the cryptocurrency space? Well, joining me to discuss some of the benefits of cryptocurrency is Chris Becker, who is blockchain lead at Investec. Chris, welcome. Thanks for joining us. What, in your view, are some of the benefits of cryptocurrency?
There are many. I'll stick to the main benefits to cryptocurrencies, and I don't want to just talk about cryptocurrencies as a blanket statement. There's many different types of cryptocurrencies. The main innovation of Bitcoin specifically is that it's the first time ever that you have a scarce digital asset. We have never before in history seen a electronic money or any electronic asset that is provably scarce. Historically, electronic monies that have only been around for around 50 years and have obviously been growing to the extent that most of the money that we use today is electronic. In South Africa, for example, 97% of the money in circulation is electronic. This electronic money is kept in databases at banks and at a central bank. And so here I'm talking generally for electronic money around the world. The thing is with electronic information is you need to regulate the people who manage the ledgers to ensure that they're keeping the currency scarce, because you can add ones and zeros into databases in order to create new money from nothing. So many people will argue that there are benefits to that from a macroeconomic policy perspective. Maybe there are, but there are also clear downsides to that when humans make errors. Humans are fallible, we're all fallible, and policymakers can make errors. And when that happens, it can destroy the value of a currency. And there are many examples of that happening through history. So what we've seen happening is as electronic money has grown, and because humans aren't perfect and are fallible and can make mistakes, you've had to see an increasing amounts of regulation to ensure that the people who run these electronic ledgers that keep track of the money aren't misbehaving. And so you've seen this tremendous increase in regulation around electronic money around the world. So that adds costs and friction to an economic system. It might not be optimal. And the big innovation of Bitcoin is that you have an electronic money that for the first time ever self-regulates scarcity. You don't need regulators to oversee. Regulators in the traditional sense, humans, auditors, bankers, central bankers, to ensure that the currency is scarce. The Bitcoin technology is designed to do that by itself autonomously, and there are various economic incentives to ensure that the system does that and self-stabilizes and mints and distributes new units of Bitcoin. So that's the big innovation. The second big one that comes with that, it's part and parcel, is that it's a protocol on the internet for money. It gives people the ability to consume this new financial technology, currency on the internet, without needing to go through any financial intermediary. And so that's a huge innovation, because what it means is you're starting to see innovation in the world of money happening on blockchains like Bitcoin and Ethereum that's happening at the speed of the internet, at the speed of software, as opposed to innovations coming from within the traditional banking system, where innovation tends to happen more at the fringes and quite a bit more slowly. And there's good reason for that, due to the nature of how the banking system is set up right now.
So Chris, in terms of the traditional conception of currencies, currency plays a number of roles. It's a store of value, it's a unit of accounting, and a medium of exchange. Do you feel that Bitcoin and other cryptocurrencies are at that level where there's sufficient uptake, where that medium of exchange principle is being realized?
Look, so it depends. So if we talk about Bitcoin as an example, there's a community of Bitcoin owners and believers, if we can call it that, in the world of, I would say at most 100 million people. Of that 100 million people, you're probably going to find a few million people who will trade with each other or amongst themselves in Bitcoin, expressing value that they produce in Bitcoin. So there's some research publications, strategists doing research on cryptocurrencies like Bitcoin who say, I want to be paid in Bitcoin for this research. And they don't really accept anything else. So you see that. So to those people, Bitcoin is a store of value, it's a unit of account, and it's a medium of exchange. They're trading for it. But when we're talking about a few million people in the context of a world population of several billion, clearly it's not crossing that mark. It's not accepted as a sort of good form of money. So it depends on the context that we're thinking about these currencies of, but certainly it's still early days. Bitcoin's been around for just over a decade. Ethereum's even younger than that. The internet that we use today, that we're communicating through right now, was first being built in the 1960s in the ARPA and DARPANET in the US. It took a good 50 years before it became widely diffused and used by just about everybody on the planet. And I think blockchain technologies is an internet protocol that'll take a similar number of years before it's very widely used by most people on Earth. So the criticisms by mostly central banks at this point that these aren't currencies to most people, I guess, is valid. But that doesn't mean it won't be in the future.
So Chris, how can ordinary people, investors, go about dipping their toes into cryptocurrency if they haven't already gotten into these kinds of products?
So look, it depends on the objectives of the individual or the entity that we're speaking of. It depends on the skills that they have. So if you're speaking of an asset allocator, an asset manager, for example, who's looking to get exposure with third-party money or their own money, they need to start doing the research and ensure that they understand what they're getting into. So clearly a lot of economic and technology research needs to take place before they start deploying capital into the space. But to those listeners, it's a very interesting asset class because it's got this highly asymmetric payoff profile. If it works out, we're going to see the value of this asset class multiple times higher than it is today. If it doesn't work out, it could go significantly lower. But it's got this great asymmetric payoff profile where you can manage your portfolio and allocate some capital to it in order for it to obviously enhance returns over the next 5 to 10 years. So that's a few comments to the asset managers. To people who want to trade this, clearly, they mostly look at charts and market information. There's research that they need to do in order to understand this market before trading it. But these markets are volatile, so it's very attractive for traders, including arbitrage traders. But I think the more interesting and important opportunity is for engineers, software developers, and business builders to understand this new asset class and this industry, the blockchain and cryptocurrency industry, where there's still tremendous amounts of friction. And if you begin to get involved in the space by perhaps buying a small amount of Bitcoin or Ether, downloading wallets for each of those blockchains, and starting to transact and interact with these technologies, you'll quickly start to see the areas of friction where you can build a business to remove that friction, because it's in removing that friction where you can earn profits and returns. And so I'm seeing a lot of capital and brain power coming into the space to eliminate these frictions, just to make this technology better and easier to use for customers. I would say blockchain technologies are kind of like the internet in the late 80s, early 90s, where most of the big businesses that really knock it out of the park haven't been built yet. And it's very possible for anyone now to build a financial services company that runs on these new cryptocurrency and blockchain rails out of South Africa, out of your garage, and to scale it to the world over the internet. So some very exciting opportunities. And that would kind of be my approach, I think, is to build businesses that add value to other humans that leverages this technology.
So Chris, in terms of the regulatory response to cryptocurrency, how do you see central banks and other regulatory authorities engaging with cryptocurrency over the short to medium term? Do you think that there's potential for greater integration into the existing financial system?
Yeah, I think that integration is already starting to happen. The regulatory focus has mostly been on any crypto assets. I wouldn't call them currencies, crypto assets that are securities. So if a business is raising capital by issuing crypto tokens, that doesn't pass the Howey test, I believe it's called. It acts as a security. That means some regulations have been breached. So I'm seeing a lot of focus on that front because there needs to be consumer protections in place. On the cryptocurrency side, pure cryptocurrencies like a Bitcoin or an Ether, the Securities and Exchange Commission in America has already ruled that Bitcoin and Ether are sufficiently decentralized currencies, meaning it's not issued by any central authority. So they're kind of being left to their own devices to just develop and for people to interact with it. Where the focus from the regulators, I think are predominantly focused at this point, is on ensuring that there are consumer protections in place where businesses are set up to facilitate customers, like retail customers, interacting with the technology, because you often see scams happening at that level. So in other words, a business will get set up, it'll offer a service to its customers that get onboarded with it that says, if you send rands to us, we will buy you Bitcoin and fund your account with a Bitcoin. But in many instances, that doesn't happen, and you will have no legal recourse if that company disappears with your rands or your Bitcoins. So there's a big focus on the consumer protection front right now to minimize the level of scams and Ponzi's and these types of things that are being built. And that makes sense. And on the other hand, we're also seeing money laundering regulatory bodies like FATF, for example, putting in some guidance to national regulatory bodies around how to monitor these new currencies and put regulations in place, at least for other intermediaries to regulate these currencies in order to minimize terrorist financing and money laundering. So those are the two big areas that I'm seeing regulators focus on. Like I said earlier, the big difference between these currencies and traditional rands and dollars in bank accounts is that Bitcoin or Ethereum self-regulates money issuance. You don't need auditors and regulators running around, if I can put it that way, ensuring that no bank is creating more units of this currency than they should be. So the regulation shifts away from controlling the ledger towards people interacting with these ledgers. So that's a big change. And I think it could actually streamline regulations tremendously, because there needs to be global coordination around this too. And so these very transparent financial and payment system regulations that we see from country to country around the world could get massively streamlined, and that can only bring benefits to the global economy.
Thank you very much, Chris. That's all we have time for today, but I think that this is a very exciting and interesting space, both in terms of the technology and also the investment opportunities. That's it from me, David Ansara. If you enjoyed this content, please do give it a like, subscribe to the CRA channel, and also check out the link in the description below to our 30-day free trial. Until tomorrow at 7 a.m., take care.